Now more than ever, innovative technologies are fueling change and sparking new ways of thinking. Collaboration between corporations and startups is key to staying at the forefront of these trends. However, finding the right startups can be expensive, time-consuming, and ineffective. But Plug and Play is here to help.
Let me introduce you to my colleague Yael Tamar, CEO of SolidBlock. Today, Yael is going to be speaking about a super interesting and innovative trend in the intersection between fintech and proptech, which is asset tokenization. And she's going to explain to us how this is connected to decentralized finance. So welcome, Yael. Thanks for being here with us today, and the stage is yours.
All right. Hi, everybody. I'm Yael Tamar, CEO and co-founder of SolidBlock. And I'm here to talk about a really exciting space of DeFi, decentralized finance, and how it can benefit property, right? From all sides. On the one side, property owners, and on the other side, property investors, and then the whole ecosystem of property. So we're going to talk about how we can transform any asset into a tradable financial product. So before we talk about DeFi and what that is, let's talk about what CeFi is, right? CeFi is centralized finances, traditional finance, where banks govern and control people's assets, right? So this is what we have today. Anytime you send money, likely it goes through a bank or PayPal, Venmo, and similar systems. By contrast, DeFi, open finance, individuals or institutions can sell funds, send funds directly to each other. In addition to that, individual is the custodian, can be a sole custodian of the assets, meaning if I want to hold stocks and bonds, if I want to hold real estate, I don't have to rely on third-party databases. I can just hold it in my wallet, right? You can use professional custodians, of course, and likely that's where banks are going to go, right, into those services. Now, another thing about DeFi is that it's an open source. Mainly an open source ecosystem, meaning that developers, software developers from all walks of life can come in and start creating different applications, right, on this open source software, which is really, really cool, right? Now, you can have traditional assets like real estate, gold, silver, and, private equity, and you can also have new types of assets. I'm sure that all of us here, or many of us, heard about the NFTs, right? Non-fungible tokens, which are new types of assets that have sprung into the market. And then together with all of that, you have a lot more transparency of, all the issues surrounding real estate, right? Which is by contrast to today's system, right? Which is very opaque. Now, to review CeFi versus DeFi. In CeFi, you have individuals or institutions and a bunch of banks in the middle. Sometimes you can have up to 20 correspondent banks, right? Sending money from one place to the other in the world. By contrast, DeFi system, you have two, a sender and a receiver, and then a network of computers in between that facilitate that transaction, which is much faster, more efficient, cheaper, and so on, right? So I'll just give you a quick overview of examples. Think about in a traditional real estate, what lending looks like. There's, mortgages, there's some private equity lenders. There are also some P2P lenders that are available as well. In the DeFi space, individuals can pool their assets together with the help of blockchain, and then you can collateralize these assets, and you can collateralize these assets, and you can borrow against these assets through this DeFi ecosystem. You have different decentralized exchanges that facilitate exchange of different assets, right? That you can exchange one real estate asset or a piece of real estate asset for the other, right? So there are different types of stable coins as well. So these are asset-backed coins, which is also a really, really cool space. In the crypto space, usually they're backed by crypto assets. And in the real estate space, we'll see stable coins backed by real estate assets, right? So how do we get access to this DeFi space and this DeFi ecosystem? How can real estate assets today, how can we take a hotel, a commercial asset, how can we take that and take advantage of the DeFi space? Well, first and foremost, the first step to get from where we are right now to this new ecosystem and this new space of DeFi, you need to digitize the assets, right? You need to tokenize the assets. So that's what we do at SolidBlock. We take real estate and we help convert it into a financial product. Now, how do we do that? So first, think about the real estate space. $300 trillion in value. Only 1% of that today is liquid, right? Is liquid, and that's publicly traded REITs. By contrast, when you look at private equity, it's pretty much the opposite. The majority of equity, I should say, not necessarily private, but is actually in IPOs, right? So that's where we're asking ourselves, where's the market opportunity? And it is in real estate, right? So the world is much more receptive to blockchain recently. The regulators are receptive. In the last 10 years, the whole market has made amazing progress, right? Has made amazing progress in this space. So what does it mean to tokenize a real estate asset, right? Tokenization really means two things. It means you will likely securitize an asset and then you will digitize it. Now, we securitize large assets where you need several investors or a lot of investors to come in and fulfill, and complete the investment, right? So if you have, let's say, a large commercial asset, you will likely first securitize it, meaning create a special purpose vehicle and then issue securities to investors from that vehicle, and eventually that vehicle will buy a piece of the asset, right? So that's a normal securitization. That we didn't invent anything there, plain vanilla, right? What's new here is the digitization component. Instead of writing the ownership of this security on, in a database online or maybe in a PDF somewhere, we digitize it, right? So we digitize it and we record the ownership on the blockchain through a smart contract. What does that allow us to do? That allows us to now trade this security, right? You can trade it peer-to-peer, over the counter, and you can also trade it on eligible and compliant exchanges, right? So that's what we have. We have securitization and digitization together. That's tokenization. Now, in some cases, we don't need to securitize. And what are those cases? When we have one buyer for one asset, right? Let's say you have one buyer of a condo or, over a hotel room, or, it's a small asset. In that case, we can actually issue NFTs, non-fungible tokens. And those are pretty popular right now. And those can be traded without, these compliant exchanges and so on, because at the end of the day, all you're doing is just trading assets, right? Not securities. And you're using blockchain to do that, which is very clever. So what are the benefits of tokenization at the end of the day, besides gaining access to this DeFi ecosystem that I talked about? Well, let's review. Tokenization is when you take rights to an asset, right? You're a passive investor. You have rights to revenue coming from the asset, either interest or dividends, right? You convert that to digital tokens, and then now you can trade them, right? So this process makes the asset more attractive because it's more transparent. You have, usually place the asset on some sort of a platform like SolidBlock. You have people looking at it from all over the world, right? So it becomes more attractive and also valuable. So we know even before tokenization, if you put an asset into a REIT, it becomes more valuable. Appraisers will appraise it higher, right? And now, again, the demand for the asset will increase, right? Because you can attract global investors. So these are all benefits of liquidity, right? So, and in general, the process, what I mentioned, the process of tokenization involves what's called the security token offering, which, step number one, securitization, issue a Reg D 506C security or a Reg A plus or Reg CF. right? And then afterwards, issue the digital token to investors, which they can hold in their wallet or in a custodial wallet, right? So SolidBlock, for example, offers a custodial wallet. We can hold your tokens for you, just like any other brokerage would do when you buy stocks and bonds, let's say on Interactive Brokers. You don't have to worry about all the different issues of storing your assets on your own device. And then eventually, you will be able to trade, right? You'll be able to trade, so you have control over what you're investing in, right? So let's review the setup process. Set up a vehicle, a special purpose vehicle, onboard the investors on some sort of platform, make sure they undergo KYC, AML, and accreditation, then create digital tokens through a blockchain program, right? And then finally list these securities on exchanges so that the owners of these securities can easily trade, right? So these exchanges are normally alternative trading systems, ATSs, basically FINRA registered institutions that have a license to trade these securities. So I'll give you an example of a project we did, which was really the first commercial real estate tokenization project, the St. Regis Aspen Ski Resort, which issued elevated returns. The management company issued the Aspen coin, and we, SolidBlock, created all the tech infrastructure and the smart contract. So the project was really a textbook project. It raised $18 million from 22 investors, mainly accredited investors and funds, with the investment ranging from $10,000 to $2 million plus. It represented 19% of the equity in the project, and then it was listed on an exchange called T0. And it was trading, and it's now still trading at a 20 to 30% premium. So to recap, what are the benefits, right, to investors and to sponsors? The benefits to investors are easy, right? This is liquidity. People, instead of sitting on 5 to 7 years in a project, you can exit much earlier. And the benefits to sponsors, majority of the sponsors are sitting on a large amount of equity, right? Look at the St. Regis. These guys literally, had, the whole asset value was around $230 million. It was mortgage on the property. They were sitting on $90 million worth of equity, right? For many, many years, right? So instead of sitting on all that equity, they leveraged and they took $18 million out and distributed it to investors, to LPs, right? Obviously, there's a management fee that is being charged from these investors, right? So they're still managing the hotel, and they're still benefiting through carried interest, once this portion of the hotel is sold, right? So it's a win-win for everyone in terms of sponsors. Now, since we did the project, the space has evolved significantly, and now it's actually possible to tokenize the majority of the equity stake, right? So you're not going to tokenize 100%, but you can go up to 60, 70% of the equity in the project, right? So that you can actually go and build more projects with the cash that you're getting, right? So what I mentioned in the beginning of the presentation, right? Remember the decentralized exchanges, lending, and also NFTs. So I believe that that's the future of real estate, right? So, real estate being traded on a variety of exchanges, centralized and decentralized. If it's a security, then obviously they have to be compliant exchanges. And if it's an NFT, it's a very, very easy way of transacting for investors that are investing for the sake of getting profit, right? You don't necessarily have to buy a house to rent it out and to get your monthly passive income. You can actually buy a property through an NFT and then get the income anyway without the whole hassle of title switch and transactions that are very cumbersome, right? And of course, the lending is very, very, very interesting. Lending outside of the banks. Also think about real estate projects that get bank lending are considered much more risky, obviously, for investors, because if the project is In default, obviously, the investors are never going to see their money, right? In that scenario. In the DeFi space, the lenders are, they're on the same level of the capital stack usually as the equity investors. So that becomes, very, very attractive as a model. So what I want to leave everybody here with is, imagine you walk into a bank, right, today, and you have $100,000, right? So you come to the bank with that money. What does that money award you? What does it give you? Well, you can, make a down payment on a property, and then the bank will give you a mortgage. You can put it in your, some sort of a savings account and get interest, or you can put it on your credit card and start spending it, right? Basically payments, right? So imagine that sort of environment and that sort of world when you come in with your digital real estate. Instead of $100,000, you come in with $100,000 worth of digital real estate. Again, you can get loans, you can do payments, you can do credit, you can invest that, reinvest that, you can actually, put it somewhere to get interest. So, on top of the interest that you're getting automatically because, real estate is paying you out some interest or dividends. So imagine that world of decentralized finance that is catering to the real estate backed digital securities, right? So that's really, really cool. And I'd love to kind of in a few years from now, go and revisit this presentation and see how far we got down the road, So that's it. Think about tokenization as a base for what's coming, for all of these new things that we'll see in decentralized finance. And one thing that I want to mention that's not in this presentation, but I think it could be really interesting topic for everyone, is the metaverse, specifically also because Facebook has now rebranded as Meta, and real estate should really be looking into the metaverse. You can buy and sell real estate and buy land in metaverse right now, and tokenization is a really important component in the metaverse as well. So, and I'd be happy to make a separate presentation on the topic. And if you have any questions for me, please feel free to email me, find me on LinkedIn, on Twitter, at Yael Tamar, Instagram, pretty much any platform. I'm very accessible. So be in touch. Let's do interesting things together. Thank you.